Good morning. Richard Calhoun, Creekside Realty, 40 years of experience selling real estate for buyers and sellers in Silicon Valley. Here to talk about the weekly real estate marketplace, have some important disclosures at the end regarding last week's data accuracy as well as this week's data accuracy. So this is the first slide. It's showing the two sides of the supply-demand equation. It's showing the supply, the available inventory. It's also showing the new inventory, what's coming into the marketplace, as well as the demand side, the number of offers that were accepted. So if you look at this, the blue line saying that we shot up quite a bit in inventory. There's a reason we shot up quite a bit in inventory. The MLS is now posting the coming soon listings that can be shown as active listings, and that had not been being done. But if they can be shown, they're really active listings. So I don't see any need to correct that and subtract that going forward. And I think it's actually a more accurate representation. If the listing is out there, it's on the MLS, it's being told it's available, even if they're saying they're not really ready, it's still a property that in a tight marketplace, a buyer is going to go out there and look at. So it's inventory, in my opinion, going forward. But that explains this rapid increase here. It may also sort of explain the rapid decrease back here, because the members only thing for Santa Clara County started last year. I think it was on December the 1st, and it really didn't take off. And I think as it took off, more people used it. So that would be your decreasing inventory. It's a little surprising it decreased so rapidly, but now that we're counting it again, it's gone back up. That's what I'm pretty confident is going on. I'm going to do some more research, but basically what you're saying right now is based on data that I believe is reliable. We have more inventory now by about 15% than normal. Now, keep in mind, that does not mean we have more single family homes. It may mean we have more condos and townhouses, because this is everything blended together, everything in San Mateo, Santa Clara County's condos and townhouses. The next thing is the number of new listings. You can see last week it was real low. Now there's this big spike because of Memorial Day, but you would have expected it to go back up, and it really didn't. Now it did go back up this week. The reason for that is part of the problem we were having last week that was unknown at the point is the MLS was no longer updating the data share about 9:30 on Thursday morning. So basically most of the new listings that would have come on Thursday morning, Friday for the weekend weren't reflected in the data, which made it artificially low last week. So this data point is artificially low. It was probably supposed to be up here. I'm going to go back and see if I can reverse engineering it. But number of new inventory coming on the market is about 40% above where you'd expect it to be. Now flipping over to looking at the red line, which is the number of offers, the demand side, you can see that it came down from Memorial Day, which you would expect. It was also artificially suppressed more than it should have been because it wasn't reporting sales for Thursday and Friday. So I was missing 2 days out of 35, which is pretty significant. You're somewhere around 8% of the data points are missing. So this data point should not be that low. I believe we're accurate going forward. So we're somewhere around 142%. Long term, we've been, I would have said about 135%. We may be now at 140% of the normal activity. That's what's really happening is we have a huge amount of demand that is way above where we've been. My benchmark is the 5 years, 2015 through 2019. Now we're flipping over and just looking at days of unsold inventory. This is the ratio between supply and demand. So you'd expect it to go up for the holidays. Then you would have expected to have improved. But I think this is artificially high here, this point from last week. And it's artificially high because I've lost 2 days of sales. But you'd also say I lost 2 days of inventory. Not really, because when you're not updating the database, the total inventory is frozen in time essentially. The number of offers, since I'm only going back 35 days, the calendar clock moved forward. So I was basically using 35 days on Wednesday. On Thursday, actually Wednesday's data. Thursday morning, I was using 35 days. Thursday morning, without realizing it, I was using 34 days. Friday morning, I was using 33 days. And then Saturday morning, I was using 32 days. And that's why this increase here is much greater than where it should be. And again, once the database is caught up, I think I'm going to go back and re-engineer it the best I can. And when I say the best I can't ever go back and get the right number of active inventory because that's a moving target. I can go get a close approximation of the number of closings and the number of sales. In any case, this number last week was overreported. This number is probably pretty accurate. So last week, it's probably about here. I would have expected it to be higher than this week because of the holiday. The other reason we've gone up here is normally that would be an indication of a slowing marketplace. I want to make it clear, I don't believe the market is really slowing like I initially thought potentially last week. And the reason for this, the increase, the slowdown, is because now we have those coming soon listings that can be shown. They're counted as the part of the active inventory. So I think what really was going on is during this period of time, we were artificially low, and you can see that it pulled away. And that was because more and more agents were using the coming soon. They were on the MLS. They were getting exposures for the agents. They weren't counting as available inventory, but as soon as they went into escrow, they counted as a sold. So you were basically having the demand side count without it counting on the inventory side, which clearly gives you bad data. Here is overbidding. Now, this graph has nothing to do with supply and demand. It's just looking at what has closed. Where is the supply, the sale price to list price ratio for a given week? So along each line is a given week. The purple line, which you can see sort of right through here, and gets lost quite a bit, but right through here, that's the current week. So it's all clustered together. All the solid lines are very close together. You can see the orange line here dropping down on the low side. But when you really look at it, I still think that somewhere around this April 24th was sort of the peak line right through here, but they're so close together. I would say they're all equally strong, which means the buyers are sort of consistently overbidding by the same amount of money. Then you can see the dashed lines. Those are the next 8 listings, 8 weeks going back. And then the dotted lines are 6 weeks. That's the worst month we ever had. That's the best month we ever had. So you can see we're closer to the best month than we are to the worst month by quite a bit. And we basically have been improving in this direction. I basically would almost say now that the market's no longer improving, but it's flat. The arrows, the red arrow, this bold red arrow is to show you which way the market's improving. This graph shows you the appreciation from the median price of all 2020 for the price for the last 5 weeks. It is surprising that Santa Clara County, after sort of looking like it was somewhat stable here at 18, 19% and then hit 20, now it's back up to 22. So it looks like the appreciation is still going. This is huge. Anytime you look at numbers that are double digit, but now these are, numbers that are somewhere averaging around 20% appreciation since last year. Now, the median price likely happened somewhere basically in the first week in August. So what you're basically saying, since the first week in August of 2020 to now, which is less than a year, we've seen roughly 20% appreciation. Some areas higher, some areas lower. The smaller areas fluctuate more than the bigger areas. Saratoga, Las Gatos has come on strong recently. South County was off to a strong start back here at 30%, but now it's down to 18%. So you have to keep a little bit of this in statistical fluctuation. That's one of the reasons why it's so hard to reverse engineering data. When you're off by a day, you go, oh, just slip it back. But if you slip it back, you're no longer comparing apples to apples because there's a huge weekly, a huge monthly cycle. So that wraps up a brief recap. I will pause and answer any questions before I go into more detail. This is my contact information at the bottom. The handout is available, and that is right here. You put in the root URL, which is highlighted in green, add in the word handout, and put in the 8-digit year, month, date code. That got up about 3.5 minutes before the hour. To get to the meeting, you put in just the year after the root URL. To get to the YouTube channels, just the root URL. And to get to any specific episode, you put in the 8-digit, the year, month, date code. So let me see if anyone's got any questions for me. Can anyone have a question? Just unmute yourself and ask away.
Richard?
Yeah, Lily.
Can we revisit the page 2?
Page 2? Sure.
Right.
This one.
Okay. Yellow. Okay. You say yellow line is 5 years median.
Correct. And that's always going to, so I'm comparing the 5-year median to itself. So it's always 100%. So if you're if any one of these 3 data points is on the yellow line, you have exactly what you'd expect based on the 5-year median.
Okay. So the 5 years median can be a straight line.
Well, you're comparing itself to itself. So I took the 5-year median, because this is a percentage basis. It's not raw data. Everything's on a percent base. So the 5-year median is always equal to itself. When the line is above here, like inventory, this is a total available inventory. It's saying it's somewhere around 115, well, more like 118% of the 5-year median. But you don't know what that 5-year median number is because it's a percentage.
Oh, okay. Because the next page, it looks like the 5 years, the blue line. Okay.
The yellow line is your 5-year median, and the reason the 5-year median is a curved line
right.
is
Yeah,
now
that's
it's the raw data versus a percentage.
Oh, okay. All right. That explains my question.
Thanks for asking, because if you have the question, someone else does as well.
Okay.
All right. If anyone else has anything, jump in. Otherwise, I'll start going forward. Now we're going to look at the same data broken down a little bit so you can have some idea of what's happening. So on active inventory, this is how high the reservoir is. You can see in Santa Clara County, we had 994 available listings. To give you some idea, that number drops to about 775 if you don't include the coming soon that are available to show. So that 200 extra, almost 225 extra listings is a significant, it's 1/3 of the old marketplace, which is why the DUI went up and things. It's a huge influx of data and, changing the definition like that. And they didn't change the definition. They just changed how they were treating the data. Before you had to search for coming soon to show it. Now you get when you're searching just at market listings, you get coming soon show, but you don't get coming soon do not show. So, they changed how they displayed their database. So it caught me off guard. So anyway, the new inventory is 994 compared to a week ago at 1,008. San Mateo County single family, you can see that it went up. It went from 434 to 451. So the two counties are going in opposite direction. And that's why it's important to look at micro markets. In Santa Clara County, we've actually had a reduction, not a huge reduction, but we've had a reduction of 14 listings. In San Mateo County, they've had an increase of 17 listings. Then you come over here to condos and townhouses, and the same thing. San Mateo County, now it's reversed, has gone down by 6 listings, and Santa Clara County has gone up by 4. Now, none of these are huge shifts. Now, when we go on to offers, instead of looking at this week and last week, we look at 1 week, so you have a snapshot of what's happening. But frankly, 1 week of data is very unstable, and that's why I also have 5 weeks of data. But you can do a quick comparison. Single family in San Mateo County last week, or 1 week, you sold 120 homes. 5 weeks, you sold 610. It's basically telling you the 1 week speed is almost identical to the 5 week demand. Here, if you multiply by 5, the same thing. You're not exact numbers, but you're the right order of magnitude. Coming over to condos and townhouses, multiply by 5. Here you're starting to get a little bit of a difference. It's 175 if I'm doing my math right versus 200. So that's off by about 10%. So what that would tend to say is the condo townhouse market this one last week has slowed down a little bit in San Mateo County compared to the last 5 weeks. And if I do it again quickly here, 5, 7, almost spot on for Santa Clara County, because I'm getting basically 700 and 698. So now those numbers are a little hard to compare. They're not that significant, either one of them, but what's very significant is what I call days of unsold inventory. That's when you take the supply, which is your inventory, and look at your demand and your ratio. And so in Santa Clara County, you're now at 22 and at 0.9 days, so call it 23. You're 23.4, that's pretty close to 23. So you have 23 days of unsold inventory. We'd sell everything off the shelves in 23 days. Now, if you remember, just 2 weeks ago, that number was 17, 18, and it jumped quite a bit. Why did it jump? It's not really a change in the market. Again, it's that extra 25% of coming soon show listings that are now being counted as inventory. And I think they really should be. So I believe this number is probably more accurate of what the market conditions are than what I had been reporting until recently at the 17. And the concept is the same for each of the counties. The thing that's also noteworthy is San Mateo County and Santa Clara County are getting a lot closer together. Before, Santa Clara County was way outperforming San Mateo County, but that seems to balance out a little bit. Condos and townhouses are slower. This is the kind of discrepancy we were seeing before, where you're 26 days for Santa Clara County, somewhere, if you average these, well, the 33 is the more accurate, but that 33 days is significantly slower than 26. That's the kind of difference we used to see in single family homes for between the two counties. But keep in mind too, San Mateo County has historically been the faster marketplace. Now, it did change before the pandemic, but I think the pandemic helped that change as people were trying to get more square footage in their home, more privacy in their home for shelter in place, and they were willing to commute further. What I find real interesting when you look at these lines here is you got this little jump up and then you sort of came back down and a jump up again. I almost wonder if the MLS tested putting in the active, not the active, the coming soon okay to show listings back here, and I didn't catch it. Then they took it back out again, and then they've put it back in again. That is the kind of thing that does happen. One of the reasons I get my own data is I'm in it, I'm looking at it, I catch those things more often, because otherwise this little hump here, this U-shaped perturbation, you really can't explain. You basically have the same U-shape here that isn't going to have the other downside to it, because I think it's more accurate. And even if the MLS goes back and starts taking coming soon show as not active inventory, I think I will force it to count it based on getting the data myself. Now what we're doing is looking at days of unsold inventory in the different geographical areas. This is single family homes only. I can't show condos and townhouses in the same graph. Single families are a much bigger portion of the marketplace and drive the marketplace. So the redder the color, the faster the marketplace. The slower, the paler the colors, and here's your raw numbers. So the absolute fastest area is Foster City. Now you can see it right here. That's a very small marketplace made up of very few homes, but I had to do it by itself because it really acts independently of everything else. And one of my key functions on doing this was to try to get data that was accurately reflective of what the market was doing. The slowest area is, again, right on the San Mateo, Santa Clara County border. It's the expensive areas, and that's noteworthy only in historically. That's actually usually the fastest area, and it's been the slowest for quite a while. And I think it's just because the demand, the high price that you get for being close to work isn't that much of a high price during shelter in place. It's going to be interesting to see how rapidly that changes back. And basically I go saturated red when you're at 10 days of unsold inventory, and we have no blue at all. But if we did at 110 days, I would go saturated blue. Between 42 and 77 and a half is no color, because that's sort of a balanced marketplace. Sort of arbitrary numbers, but those are numbers that I felt fairly reflect the marketplace for some time. So this is the active inventory for Santa Clara County. You can see the big jump up last week. Again, we've talked about that almost ad nauseum at this point. That's the addition of the coming soon, but go ahead and show listings. That, I believe, was probably included in the median because the category really didn't exist. So there was fewer of them. Now it exists and people are using it. Coming soon before was the coming soon do not show. So this whole thing of coming soon, but you can show it, is a new concept that started in December. That's the big jump. I almost wonder too, when I see this rapid decline back here, knowing that it's been played with now, did they include it initially? Then they took it away and I hadn't noticed it until they brought it back in. And I said, what's that big jump? And really what flagged me wasn't the increase in inventory. It was the fact that there was no sales happening. And then when you're trying to pull up recent sales and it's telling me there wasn't a single sale over the weekend, it's like, there's a problem. And it took a long time to convince the MLS they had a problem on the data feed too. So they did finally acknowledge that and did get it resolved. It was also compounded by they added in another major MLS to the database. And so anyone that had a stored search was putting a high demand on the resource of the computer. So it was, the response time was very slow for almost a full week. So now what we're doing is we're looking at just the number of new listings, what's coming on the marketplace. So you can see the huge impact of Memorial Day. It was delayed by a week, but notice how normally the holiday is a 1 week blip. Here it's a 2 week blip because I was missing new listings. Are only new listings for the week. So my week starts Saturday morning at 1 minute after midnight and goes to 11:59 last night. So that's how accurate this data is, or up to date this data is. Remember, I was missing data for Friday and Thursday. So of course the number of new listings is down because a lot of listings come on Thursday and Friday getting ready for the weekend. And that's the reason that number's there instead of probably up here. Now we're looking at the number of new offers accepted. And again, the number's down here, and the week before that it's up here. So this is this week's data, last week's data, the holiday data. So this is down significantly for a combination of mostly the lack of reporting, because again, I'm only looking at 7 days of data. Most of the data gets reported Monday through Friday, with the bulk of it Wednesday, Thursday, and Friday. I was missing 2 of those days. That's what caused this huge plummet down. The holiday plummet really isn't here on the demand side because buyers were out there actively looking. Here is the frequency of overbidding. This data is a lot more stable because now with just frequency of overbidding, you don't have this whole inventory supply demand issue that we've been talking about. So again, right now, for the whole macro market, which is San Mateo, Santa Clara County, condos and townhouses and single family homes, you can see with some bounce, and this data has more fluctuation in it than I would expect. It's just been something that you can see when you plot it. But right now you're basically at 80%. You've been running between about 75 and 80% all the way since about week number 12. And you can see the rapid increase, because remember, this is closings. I require sale price, so I lose about 5 weeks. So right here on week number 5, this is basically the beginning of the year. And you can see just real rapidly the upcoming and the overbidding as the buyers find everything's flying off the marketplace. Now we've reached a new plateau. You can see that we're up quite a bit over last year. And one of the things I will point out is anytime the market has a market insult, whether it be COVID, whether it be 9/11, whether it be a recession, buyers are hesitant to overbid. So even though the market was robust, the magnitude and the frequency of overbidding was much lower initially, more so on the magnitude that we'll get to shortly. But even the frequency, now we're a whole year past and we're opening up again. People are saying, hey, this is real, this is in a bubble, and they're getting more confident and they're overbidding more frequent. This is showing the overbidding of the 3 major components. This is when we did the Northern California data share, the first version, and I simply did not get accurate data for a period of time. So, just sort of interpolate the line between there and you'll be pretty accurate. This is a bad data point. I was planning on going back and getting that, but I spent an inordinate amount of time chasing down the real bad weekly data. So you can see I've stabilized that fairly well. But what you have is the red line is Santa Clara County single family homes, just showing you the overbidding, the frequency, and you can see that's up around 85%. It's followed by San Mateo County somewhere around 75%, and then condos and townhouses in Santa Clara County at somewhere around 74%. So this is the overbid frequency. It's today's date. So this is data through last night at midnight. This is data that goes back 5 weeks, I'm pretty sure. Yeah, 5-week data, single family homes. And this is the frequency. So if you join in Cupertino, Sunnyvale, 96.5% of the sellers are getting overbid. And I'm going to do a little bit of a dive into this particular area, because not only is that very high, it's not that high compared to Milpitas, it's been very consistent in this number. So I almost wonder if one of my formulas got locked into a fixed number, because there should be some fluctuation. And I think it's been 3 weeks in a row now. I think I remember that being 96.5. It's possible, it's just unlikely. All the other data does fluctuate because I compare the first several to make sure the data is working. I don't get down to Cupertino, Sunnyvale, but now being aware that that's a potential issue, I will pay a little bit more attention to it. And again, the redder the color, the more frequent the overbidding, the whiter the color, the less frequent. No color is right at 50 instead of a range. Saturated blue is at 15, saturated red is at 95. So the only saturated red is Cupertino, Sunnyvale. Milpitas, North Valley is close, so is North San Mateo County. So, and when you look at North San Mateo County here compared to this area here, it's really hard for me to tell that this area here is redder. That's because the scale is so gradual of a change. Here is the magnitude of the overbidding. This is how much are the buyers willing to overbid. And this is where the insult really takes effect, because you can see last year, even though the market was strong, we were only getting 3-4% overbidding. Now the market's strong and we're getting somewhere around 8.5% overbidding. San Mateo County did get all the way up to, by itself, single family homes, San Mateo County, up to, I think it was 112.8% in the past. The hottest area may be that high because the condo townhouse market's going to be pulling this down. Because again, this is macro data and this is 1 week. And I'm shifting occasionally between the 5-week data, which is sort of giving you a more stable look, and the 1-week data. The 1 week is simply to go, which direction is the market going? And here is the map of the different hotspots as far as the maximum overbidding. And real quick, it looks like maybe Foster City is, oh no, Cupertino, Sunnyvale, 116.3% of the overbid. And it is not quite to saturated red. That happens at 117.5. But the lowest is this Menlo Park, Atherton area, but they're still getting 3% more than their asking price. So that's just, and they were below 100% earlier this year, if you remember. This graph you already saw, I just brought it out. I brought it out just to refresh your memory, because now we go to this graph. This graph is supposed to be easier to see. You can see the older lines here, and because it's easier because we're only going back for 12 weeks and all the other stuff's not on there. So you can see the solid lines are the most current lines. You can see the worst of the most current lines is May 22nd, but they're all grouped together. And what it was really saying is the dashed lines are all grouped together. And the only two that really aren't are these two, which it's hard for me to say, but I'd almost wager money they're the first two, being April the 3rd and April the 3rd and March 27th. And then you can see the dotted line here, the brown, that's probably the 10th. And then the other one is probably the 17th. Looks like it's back here. So you can see that, the 10th was up here, the 17th was up here, back down again. But you can see that basically since the 10th of April, all these lines are clustered very closely together. And that just says that the market's pretty stable. This graph is actually an error. It's supposed to be single family homes, but when I plotted it this morning, I plotted in all condos and townhouses and both counties. So I'm sort of comparing apples and oranges, and that was a mistake. And I just didn't have time to get it corrected before I went live. Now we're looking at price. This gives you an idea here. The color is assigned by the middle number, which is the median, which is what most people follow. I add in the 10 percentile, so that's the cheapest percentage, and also the highest percentage of 90. Yes, you can find that 91, that 95%, but this was a way of sandwiching it. In statistics, a lot of times people talk about quadrants, and they talk about the 25th to the 75th percentile being sort of the middle of the marketplace. I expanded that out. The concept was the same. The reason I expanded it out is to tell a client that 50% of the homes are in between a certain price point isn't really saying much. But now when you go and you say 80% of the homes are between these two price points, that really starts pinning down the price range that you're going to see in the different geographical areas. And that's sort of what the intention of this graph is. And this data is accurate as of last week. I just did not get the opportunity to upgrade it. So with that, I'm done. And the nice thing about this is you can quickly go back and see where you stand compared to the last 20 years. And it's actually more accurate for last week, because last week would have been June the 5th, and that would have been when the data should have been, taken, but I was missing 2 days of data at that point. Now it's on the 12th. So next week I'll be comparing this to June data. So with that, I'm back to the URL so you can look at that. Anyone have any questions? I'm open to entertain them. I'm not seeing anyone unmute themselves. Normally, being the second Saturday of the month, I go into monthly data, but because of everything that happened with the data instability for the last since Thursday of last week, I don't have the monthly data this week. I probably won't have it next week. I probably will end up skipping it. I will probably bring it back in the second week of July. I just didn't feel comfortable with the fluctuations. The other key is for June data. It's supposed to be gathered on June the 5th, which was Saturday morning, and I gathered the data, but I know the data that gathered is inaccurate, and there's no way to get that accurate data. So I think, unfortunately, this is going to be the first month that I may skip. I'll reverse engineer it, but it won't be accurate. So unless anyone's got a question, I will wrap it up.
Richard?
Yes, ma'am.
Richard? Okay, this is Lily. So I think that there are 2 points. One is that the MLS data that you're collecting, they are reporting, it has been corrected, right?
I think corrected is actually a good word. And, the data was there where I could have been adding in coming soon show, or coming soon do not show, or both. But now they sort of forced my hand by throwing it in with the active listings. And they did that without telling us. And that's the part that bothers us. But I think from a statistical point of view, that is actually a better way of doing it. So I don't see any need. I don't know how I could possibly take out the coming soon active if I can come up with a way of, justification for doing that. But I don't think that's the way to go. I think it's more accurate because frankly, if they're out there, especially now, if they're putting them in the agent's search criteria, to me, they're an active listing. I don't even know why we're calling them coming soon if you can show them.
Okay, so the second point is that when you collect data, so you add the active and coming soon together as the active.
That is what the MLS is doing, and I'm not aware of anywhere way I can unseparate them without a whole lot of work. So yes, I am combining those two data now as active listings. And frankly, I think had I thought about it, it would have been the smart thing to do back in December. And I don't think coming soon caught on until sometime in February, and that corresponds with that dip in inventory. So I think that, inadvertently, with the benefit of hindsight, even though the data was accurate, I think it's one of those things where a statistician can make the data say anything they want. And I think I was incorrectly saying the market was hotter than it was. Now, is there a difference between 17 days and 22? Yes, but they're both still extremely hot marketplaces. So that's the reason why there wasn't a red flag, because my benchmark for a neutral marketplace is between 40 and 80 days. And any number below 40 is a pretty strong marketplace. Any number below 30 is a super heated marketplace, frankly. And so, yes, there's a difference, but would the consumer on the street notice the difference? I'm not so sure they would.
Okay, so yeah, now we don't need to worry about it. The coming soon, the grace, because they're already added together.
They're added together. The MLS now is adding them together, which I think is the correct thing to do. But if you're going to add them together, what's the point of calling them coming soon?
Yeah, I don't know.
I didn't understand the concept of a coming soon that you can show. I can understand the concept of coming soon, do not show. We're getting it ready. We're staging it. We're doing repairs, with clear cooperation. That was the concept. But they invented this thing of, coming soon, but you can go ahead and show it. The only advantage that I see, and it's a disadvantage really for marketing, is the photos are missing. So, and the agent can put them out there, but and maybe it's because they're waiting for the photographer to show up and to process and stuff. I do in my own in-house photography. And so my turnaround time is same day, but this is the point. This is where realizing that the sum of the marketplace is far smarter than any individual. What I try to do is just report on what the market's doing. And I try to report on what the market's doing in a way that accurately reflects what the market's doing. Like the MLS, a great example is the MLS historically has counted pending transactions where the listing agent wants a backup offer as inventory. And maybe that's a great example. That would inflate the number of inventory, that would increase the number of days on unsold inventory. But I think that's an incorrect way of doing it because those properties are not available for the next buyer. So, and at the beginning part of the year, you get an incorrect result. You have a huge increase in the number of pending transactions. So the MLS is reporting inventory where the number I report is showing inventory is going down because those homes can't be purchased. Using the same logic with the coming soon, a coming soon show is fully available and for the buyer, so that should be counted. So that's a very strong reason for shifting my data because I don't like shifting data unless I absolutely have to. You want consistency. Statistics is good for understanding what the market's doing. And if you change your definitions all the time, that's huge. And, I've been doing this since 97, and this is probably the biggest change in definition I've had. I've done little changes like changed from a calendar month, a 30-day month to a 35-day month. Those were graduals. Those were controlled changes. I think they were changes to get rid of statistical fluctuations. This one came from left field and it was a new concept. And I think it's the right thing. Yes, I was forced into it. Yes, they hit me over the head with it. Yes, they didn't tell us they were doing it, but I think the data going forward will be better.
Okay, good. Thank you, Richard.
You're welcome, Lily. Thanks for joining me. Anyone else have a question? Otherwise, we're done for the week. All right. Have a nice week, everybody.